We're at Lifestyle Trading 101, and today we're going to talk about profits. These profits. So we have basically $1,400 here, another $600 here, and altogether about $2,000. Now, of course, these numbers always fluctuate, and I wanted to point out that this profit wasn't just kind of like, it doesn't just show up right away. It happens with some ups and downs. So here's the actual screenshot that I posted a couple days ago. And basically the 1400 came from this stock position where we currently have a zero position. So we cashed out of it. We basically shorted it and it went down like 93, 94%. And we were able to collect that as realized money. And we also had a short on the VXX and that went down for this amount, but of course it was actually a little bit more than that because we actually ended up covering the remaining 200 a little bit lower than 15.4, I think. But yeah, this is generally a screenshot of what happens, the alerts this week. But besides showing the profits, I wanted to show you like how it actually happened and what the markets were doing, what I was thinking. So let's go back to the homepage and we'll go. So this is basically the daily chart of what happened, right? So, there was this kind of movement. Each candle represents a day. This last one was on a Friday, so you can count backwards from there. So basically on the Good Friday weekend, around April 14th, just 2 weeks ago or so, I posted this prediction that there would be a possible reversal. I presented the case for a reversal, and this was dated at this time. At that time, the daily chart looked like this, right? So going into a 3-day weekend, it sold off, and it looks kind of scary. It looks like it's gonna like crash, right? So there was panic selling into the 3-day Good Friday weekend. It historically doesn't happen because usually you get a rally into the 3-day weekend. You can recall last February of 2016 into President's Day weekend, there was a rally from the 1800 lows, and now we're at like 23, well over 2300. And so based on this pattern, as well as the news that was happening, I mean, Trump was talking about, he dropped the mother of all non-nuclear bombs. There was issues with Korea and all kinds of kind of like tense fear in the marketplace. And nobody really wanted to hold stocks like positions over that 3-day weekend. You don't know if there's going to be some big gap or not. But based on what I was seeing in the pattern, I presented the possibility for a reversal. So here's what the daily chart looked like at that time. But if you look at what actually happened since then, this is what happened, right? So when I say the case for the reversal, that's basically what happens. And what I had in mind, I specifically had actually a chart diagram, and this was what I predicted, a B wave low. And what I saw was an A wave high. So if you look at this chart, that A wave high was this kind of spike up. So basically it went like up, down, up, right? A, B, C. You look down, up, that's A. Right, so that little spike up was the A here. Then what happened next? Well, we had a down, up, down, right? Now it doesn't always happen like theoretically like perfectly matching the diagram, but you basically have a down, up, 1, 2, 3, 4, 5, right? And that's why I had this diagram ending diagonal 1, 2, 3, 4, 5, and here's the same diagram, right? Up, down, up, right? That's A. Up, down, up. So this is kind of like zoomed in. It's the same thing as this chart over here, right? So this chart on the bottom is the same thing. It's just zoomed in. So like up, down, up, A. Down, up, and then 1, 2, 3, 4, 5, right? So ABC A, ABC. Well, let's see. This we have this ABC, and then that's this little parentheses A. So this A matches up with this A, and then we have this kind of 1, 2, 3, 4, 5, right? That's 1, 2, 3, 4, 5. That would be this zigzag up with the parentheses B. So this parentheses B is here. This parentheses A is over here, and this A was this A, right? So then what happened here, right? So between here and here, I have a zigzag here, but it could be in the form of an ending diagonal where it's 1, 2, 3, 4, 5, where 1, you have a big 1 down, right? And then the 3 is slightly below the 1, right? The 3 itself is 1, 2, A, B, 1, 2, 3, 4, 5. And then the 5 um, kind of overthrows beyond the line that connects 1 and 3. So that I was thinking could potentially be the B wave low, where it follows this diagram exactly, right? So, and I mentioned the specific levels here, where this pink A, matches up with the 2373 level here, and then this parentheses A was the 2338, which is right here. So you can go back and kind of match up these numbers with that. So going into the 3-day weekend, we have this B wave low, and so of course B wave lows are usually the optimal buying opportunity. And what I was expecting would be some kind of A, B, and then we would shoot up, right? So you look at what happened. We have so going on this post, I'll scroll down to the hourly chart. So we have this hourly chart. So this was that 3-day weekend with the Good Friday. So the prediction based on this chart was that we have an A, B, and then probably like a 1, 2, 3, 4, 5 for a C wave. So that would complete the A, B, C wave. So what do we have here? A, B, right? So at first I thought this was kind of like A to the, I was hoping at 2350. We only got 2346. And then the B, and then I thought this would be the rally. And here's the thing, it dropped during the day like a lot, retracing the entire amount. And it looked like maybe that pattern wasn't going to play out. But the thing is, it actually did play out. You can think of this A wave here, and then ABC as kind of like a larger A, and then this be a big B, and this be a C. So even though like this went a little bit higher than I would have liked, and this went lower than I would have liked, in the end it still played out. So A, B, 1, 2, either this like 3, 4, 5, or maybe we're still in, or it's like a 3 here and we still have a 4, and there may be one more pop to a 5. So right now we're not really sure if the pattern completed. It looks like it may have, and we'll talk about what that potentially could mean. But yeah, basically when this was happening, we were holding IWM for the Russell and SPY for the S&P 500 call options. Because we were expecting like some kind of move to the upside. We were of course early, and the thing is, I actually got spooked out here. I was holding on to the calls. We held it over the weekend. We lost on time decay, and the thing is, it looked like things were going right, but then it sold off. So it's like, okay, maybe the pattern isn't playing out, and I wasn't sure. I wanted to hold on to the calls, but at the same time, they were kind of expiring soon, and so I bailed on the calls. So unfortunately, what could have been a really big home run ended up being only just like 1,000 or so in total profits. But if I had more conviction in this pattern playing out, I would have held on. I bailed on here, and the thing is, okay, of course I wanted to get back in, but it's like I don't want to bail and get back in and bail and get back in. Sometimes that is the right thing to do, and I personally did myself. But when it comes to like issuing trade alerts, I want to be a little bit more conservative, so that people don't have like huge ups and downs in their accounts. So basically, what happened was, we had a rally up, and then we had a pullback the next day, and so the fact that it held this level overnight here, either that morning on April 21, we continue to rally up into that Friday weekend, or we will pull back a little bit. And if we did pull back, I figured, it would might be a wave 2 pullback, um, or it might be a wave 4 pullback, and then we'd be a fifth wave up. Um, and in that post, you can scroll back into the block history, but here's the chart. And so I drew this line in the 2361 region, and it looked like, either this is a 1, 2, 3, 4, 5, and we might get like a fifth wave that might fail at 2361, or maybe this wave 2 was instead of a B, and this is 1, and this is 2, and then we would have some 3 that would somehow break this. And, when it closed this day on April 21, that Friday, I expressed hesitation that I don't think it's gonna break this level. And I said, based on Friday's pullback down to 2340, that's basically this pullback here. Um, I do not expect the next immediate move to go beyond 2362. Perhaps a spike into that region, we would push back down to 2337. And if that fails, we would go lower. And so I really couldn't think of a way that the pattern could be such that it will break this. But I did point out that there's a corrective wave 2 flat. Right? This is a flat, right? So this went a little bit higher than I would have liked. But this could potentially be a flat. And that wave 2 flat could be like a 1, 2, 1, 2. And so and that implies that there would be a 3. But the thing is, so that was what I was thinking. And guess what actually happened? On Sunday night, of course there was that French election over that weekend. And when Sunday night 6 p.m. opened up, the market just gapped up. All right, so like I couldn't think of a way that we could break over this, and then I guess the best way to do it would be the gap up. And so good thing, because with the previous day, based on the pattern, based on this diagram that I sent out, even though I got kind of spooked out and exited my long SPY calls and IWM calls that, of course, I wish I would have held on to, even after the run-up, I still had conviction that the pattern would play out, and I wanted to give it at least another day or two to play out. And that's why I issued a buy alert here at around 2351-ish, which is actually on the early side, because actually during the day it pulled back. But what we did was we did the SPY bull put spread. So again, that's this position right here. We did the April 26th, and let's just look at the timing here. At this time on the Friday, these two lines represents the weekend. We were basically shorting a put spread for that Wednesday, and so the strikes that we chose were the 234, shorting the 234, and buying the 228. Just as a general rule of thumb, the 234 generally corresponds with 2340. Of course, you always want to double check and type in SPY and make sure that the SPX and the futures line up with that number. But basically, 234 is basically betting that the market would stay above 2340. Right now, after we put the trade in, we were losing money, but because it went all the way down to test our short strike. But I had conviction that the pattern still had a chance to play out, and so that's why I held it into the weekend. And of course, we still had Monday, Tuesday, Wednesday, three days for this pattern to play out. As long as it stays above 2340, then we collect our max profit of $1,200. And what happened was that weekend it gapped up, and we had a chance to cash in 93% of our max profit. And 93%, or 93 or 95.4%, meant that instead of, or maybe I could remember this incorrectly. It was max profit of 1,200, but we have 1,400. All right, maybe I had a different amount here, slightly different amount. But the whole point is there was profits to take off the table. After this gap up, my expectation was, remember, this was the A. This Good Friday weekend was the B. And if we have an A, B, 1, 2, 3, 4, 5, then that C wave should go higher than the 23 73. So technically, this kind of like peaked just a little bit above it. So it technically could fail here and then drop. So of course, that's the minimum expectation. It could. My expectation is that it goes a little bit higher, but I didn't want to risk losing. What was 93% of max profit, just because I want to get that last 7%. So we just took the money there, and basically ran. But you see that trade wasn't the only trade that we had on. We also were short the VXX, and we weren't short just on that previous Friday. We were short like 3 or 4 days prior to that. There was lots of news of that Trump and Korea issue, and we were watching this VXX chart very carefully. But we shorted and we alerted the short on VXX at 17.8, and of course we held it for a couple days. This was it's hard to see this, but it's April 17th. But that 3-day weekend that no that weekend that gapped down with the French election, this is we were already in the green a little bit, and then this gap down just really made it a huge winner for us. So when we alerted the short at 17.8, it's at that time we covered at 15.8, and we were still holding half, and eventually we got rid of the other half. And if you look here at the VIX chart, I mean, we were saying that the VIX chart was really high at 16. I had several posts talking about how we're high at that point. We were over 16, higher than basically like most of the last year. And of course, it could go higher. But once we saw signs that we could short, we issued the alert. And from there we gapped down. This is the big gap down. And of course, it stayed there for a couple of days. So even if you covered late, you still could have covered for a pretty good gain from that 17.8 alert. Now, I do have to say the VIX chart is not exactly the same as VXX. We had like a whole separate video on what is the VXX. It's basically an ETF that tracks the differential between the front month and the second month implied volatility. So here's the volatility term structure. I was talking about how this was elevated, right? So at that time when VIX was high, this is basically what the chart looks like. The April implied volatility is really high because people expect lots of like near-term volatility, and so it drives it up. This is called in finance is called backwardation, right? Typically, you have a contango environment, and so that's contango environment is the best for a VXX short. And my expectation was that all right, this would go down, and so we would go back into contango, and this would represent an opportunity to go short. And so guess what happens, right? So just a couple days later, the chart now looks like this. So because of this, this is when the VXX goes down by a lot. So this is a normal contango environment. So do you guys see how basically that analysis helped us hold on to a bullish position over that weekend, which was critical to making this money. And also the analysis on the volatility term structure helped us hold on to a short position several days into that weekend, and we were able to cash out on some profits there. And what was that all based on? That was all based on a chart that I posted several times, which is this B wave low chart. I mean, it could have been any other chart, but this is the one that I was tracking, and it turns out it matches up these levels. It's never things are never going to be exact, but it was close enough to the point that I thought we would be in a C wave up. All right, so now you look at this chart A, B, C. Now that's basically what this chart A, B, and then a C up. Now the question is this C wave done? Well, we hit resistance right at 23.93, and it looks like we're kind of like stalling here. At the same time, we have a gap up right here. And usually when we have gap ups, they should get filled. And if you look at some of the charts for the NASDAQ and Russell, NASDAQ is like And Nasdaq is like a never land, way up there. It even looks like it's gonna go even higher. I don't know. I don't know right now. But the Russell pulled back a lot. It pulled back like 1.2%, and even more so in the after hours. It gapped up, yeah, but it basically retraced the entire rally. And so a lot of people are thinking if this is able to kind of you know close this gap and go further below, then it's very likely that the S&P 500 is at least going to test this gap down area. There's no for sure, but and we also don't know if we're going to get that fifth wave up. So right now, it's unclear which direction it will go to. I have some slight inclination to the downside in the immediate term, um, but I think ultimately in a couple months we should be higher. So a lot of the times when I reflect on these patterns playing out, I'm sometimes really like flabbergasted and like wowed as to like this is not the first time this pattern has appeared. The reason why I made this diagram is because I've seen this pattern happen before, and it's often happens to in various kind of formations, but overall the general structure kind of follows this pattern. And by using this kind of diagram as a proxy, I was able to have the confidence to hold on to that bullish position. And of course, I cast out too early, and I wish I had held on to my calls. But in terms of playing it conservatively, I was able to at least capture the important move, and that's what matters. Now, looking at this, if this is in 1, 2, 3, 4, 5 with a big A wave, and this is an A, B, C, B wave, well, it could be that we have a massive C wave down, and it'll feel like a crash. That's what is a possibility, or it could be that this fourth wave would be A B 1 2 3 4 5 A, and this is B, and this finishes C, and then now we're off on this fifth wave up, and we could go kind of higher than most people would expect. So right now we're kind of like I would say the next day or two would give us really strong clues as to which one it would be. Um, in terms of us being stuck here, that's also a possibility, but I think that's a smaller probability than the down and the up. So I believe there should be some movements in the next month. And hey, the next month is May, right? People say sell in May, go away. Well, hey, that it's very possible that we could get some big moves in May. So we'll see. But yeah, that's it for now. That's the recap. Again, these are the profits that we're talking about. But again, more important than the profits, I wanted to just make sure that you guys learn and can see what I'm seeing in terms of how the patterns are forming. And in some ways, if you're able to spot these patterns, you can design various trades to kind of take advantage of what you see might be happening. And that's basically what we do here at LST 101. We aim to make $1,000 a week based on these pattern recognitions. We don't always win, but we often win more than we lose. So I hope that clears up a lot of the potential confusion with all of these, twists and turns in the market. And I hope you learned something from this. If you haven't already done so, please make sure you subscribe to our YouTube channel. And if you're not on our email list, scroll down on the homepage and you could sign up for our email list and get email alerts whenever we post something new. Signing off, this is Silver Surfer, and I'll see you guys next time.